Hey everybody, it's Alan Brochstein from 420 Investor and New Cannabis Ventures, here to give you a brief update on the market from last week and then to talk about our upcoming newsletter for New Cannabis Ventures, which we'll be publishing on Sunday morning. So for those of you who are on the sidelines or who are maybe short, this was a great week. For the rest of us, not so much. I spoke last week about how the market had gone down on that particularly volatile Thursday morning when Russia declared war on the Ukraine and had made a new low, but rallied off of that and held above its prior closing low from late January. Unfortunately, with the action on Friday, we ended up closing below that January low, so it was a new closing low. With that said, the index did hold above the lows from, I don't know what we'll call it, Russian Thursday. The interesting divergence that continues is that while it was a terrible week for MSOs, the American Cannabis Operators Index, which includes mainly MSOs, continues to hold above its closing low from late January. So what was driving the market this week was mainly something that we've been talking about for a while. One thing driving the market is the overall weakness in stocks in general. That's the same thing. But the other issue was the reports out of GTI and Cresco in Curaleaf. The GTI report showed a beat on revenue, a slight beat, but their margins were considerably weaker than analysts had expected. So the adjusted EBITDA was consequently lower. So there was a pretty big miss. And then on Curaleaf, while their near-term numbers were fine, slightly below expectations on revenue, but certainly in line with what they had talked about. And then their adjusted EBITDA actually a little bit better than projected. That wasn't the story. The story there, which I'll talk about more later, was in their guidance, which was considerably lower than the street had expected for this year. And this is something that we wrote about 2 weeks ago in our newsletter, suggesting that this was indeed the case, that the numbers were too high. So in our newsletter, we share links to the most important news. This is a pretty lengthy newsletter this week. There was a lot of news, not surprisingly. The curated press releases that we run tend to be around M&A, financial reporting, and capital raises. And there was all of that this week, but I don't think most of that made it into the newsletter, which includes just the most important stories. And so just hitting all those stories just in order, not by category. The first one was an earnings report, and it was Kronos. And it's kind of funny because they just had another earnings report a couple of weeks ago. But this is for their Q4. Their Q3 had been late. And, the market really didn't seem to care, that's for sure. The stock ended up going lower ultimately. But their revenue for the second quarter in a row grew considerably and was ahead of expectations. And unlike their Q3, their Q4 adjusted EBITDA, while of course still negative, improved a lot and was way ahead of expectations. So that was kind of a positive story buried in a week of pretty negative news. So I mentioned Curaleaf, that was the second one. And again, their sequential revenue increased 1% from Q3 to Q4, $320 million. I think $324 million is what had been expected. And then their adjusted EBITDA was $80 million, a couple million ahead of expectations. They didn't put their guidance in that press release, so that's a heads up for you need to listen to the conference call if you want to, or at least be aware of it, so you can find out what they're going to say about the future. The next one was GTI, and they reported a 4% sequential increase in revenue to $244 million. So right now they're in second place, and Curaleaf's in first place. It was $320 million. Trulieve will be reporting on March 30th, and there's a almost no chance they won't move into second place, and there's a small chance that they'll surpass Curaleaf. Another earnings report was Grow Generation, and there again, it's not so much about what happened, it's about what they think is going to happen. And in this case, the guidance was pretty weak for GrowGen. They had already pre-announced their Q4, and it was actually a little bit better than they had pre-announced, but it was pretty bad. Revenue fell 22% sequentially to a little bit over 90 million. Hydrofarm, similarly, they had pre-announced, and again, it wasn't so much the fourth quarter report as the outlook, which was below expectations. And so both those stocks were hit pretty hard, but especially Hydrofarm, which moved to an all-time low this week. The next one was actually not a financial report; it was M&A, and MedMen announced the sale of their Florida assets, their cultivation and everything, their license, the stores, to a third party, which is associated with Brady Cobb, and that third party, Green Century, I think, will be leasing back licensing back the MedMen name. So an interesting deal. We haven't really seen at scale that type of transaction. Obviously MedMen is really hurting financially, and they're in retrenchment. They were going to get 87 million from, or whatever it was, from Ascend, and since they reneged on that deal, they get 83 million, very similar number from the sale of their Florida operations. My guess, they'll try to sell their. I don't think they can. It's in litigation, but they would certainly want to try to sell that New York operation too, and just be more focused on running stores in the West. And so, kind of interesting, this quote unquote asset light strategy. And then another M&A deal, I guess, but underneath it was a capital raise. So there was a pretty surprising announcement. I can't remember if I've talked about it here, but Hexo, I've been talking with subscribers at 420 Investor about how a convertible note holder still has Hexo over a barrel, and it's brutal. This is nasty, nasty stuff, and it very well could lead the company to take creditor protection, but it looks like Tilray has thrown them a lifeline, and it's a little bit odd. Some of the analysts on the call were saying, why would you just rescue your competitor? Why not just let them go away and take market share? So in any event, they're buying these convertible notes that have been burdening Hexo. If they're able to do it, it's going to take about 2 months apparently, and it requires shareholder approval, and so that's not a given. But if they're able to do that, they would hold these convertible notes that could convert to, I believe, 37% of the company. I think they'd like to buy the whole company. There's maybe some concerns about antitrust, but I think it's kind of sad. These two companies, they have the highest market share. They're both at about 9.8% in February, according to Highfire data. That's pretty low for the two leading companies. And what's really sad is that both these companies have done a lot of mergers just to get there. This is horrible what's been going on with the leading companies in Canada, something I've been talking about a lot. But the real story, make no mistake, remember last week we talked about how we expect Tilray to raise equity capital. Bam, 1 week later, not even a few days later, they quietly, through a SEC filing, announced an ATM registration, 400 million. So I think we got that one right. The final piece of news was Village Farms. Their quarter is a little tough to decipher because they had that CBD acquisition. So, their cannabis-related sales rose 10% sequentially, which sounds great, right? Because the Canadian market was up 5%. But when you factor in everything and you look at also that they did that Rose acquisition in Quebec, if you dig in really deep, what you'll find is while the Canadian market expanded 5% in Q4 over Q3 at the retail level, I'm going to call them wholesale, but the sales that Village Farms made in their legacy business, not including Rose, actually were flat. They were up 0.4%. So a loss of market share for core Village Farms brand, offset obviously by the addition of both Rose and their CBD business in the United States. So that was it for the curated press releases, a lot. And we had a lot more this week that didn't make it to the to the newsletter. Now, this was also a very busy week for our exclusive content. Our exclusive content is typically the interviews that Carrie does, market data reviews that I do, and then also reviews of things like our indices that we did this week as well. So just hitting those in order as well. The first one was one of the index reviews. We run 7 indices and we do 4 articles each month updating the performance, just to give everybody a flavor for how these different parts of the market are moving and the stocks that are within those subsectors. And so the first one was about the American Cannabis Operators Index, and finally a piece of good news when it comes to the markets. It had been in a decline for 11 straight months like the overall market, but it actually posted a 5% gain in February. And in that piece, we talk about the stocks that help drive that gain. And so remember that index is not just the 5 largest MSOs, and so that's where a little bit of that discrepancy might be. The second one was about the ancillary cannabis stock index, and that one, since we launched it almost a year ago at the end of March, typically it's done better than the overall market. And the ancillary stocks, remember, have a broader base of investors because they trade on the NASDAQ or New York Stock Exchange for the most part. And additionally, they don't pay 280E tax. They can scale their businesses across state lines, unlike American cannabis companies. So the last 2 months have been pretty rough. And while the global cannabis index was down this month, I think it was 2%, the ancillary index lost ground again, falling 4%. Again, in the article, we talk about which stocks performed well and which ones didn't. The third one was also an index review, and that one was about the Canadian cannabis stocks, the LPs, and they fell 3% in February. And that article also contains a complete listing of all the LPs ranked by return. The fourth exclusive article was a review of the BDSA data, and this is something I've been talking about a lot with you and at 420 Investor in terms of the tough comparisons that we had during the summer. When I launched this video series around Labor Day, we were really starting to talk about that. So we went through several months where the sales, especially out west, were really challenged, but we saw slowing in the eastern states as well, the more limited license, newer states. And December was a big break from that trend, if you recall, where we saw the sales really accelerate. And unfortunately, the January data, and I've been talking about some of that data prior to receiving the BDSA information, was really weak. And in this piece, we go over all the markets that they cover and discuss what was really a tough month for the cannabis sector. By the way, it's the same thing that happened in Canada, the January to December, which you'll see that data come out later this month. The next article was another index review, and that one was about the global cannabis index, and again, it was down about 2%, and we discussed the winners and losers there. Number 5 and number 6, or is it 6 and 7? I think it's 6 and 7. Were both interviews that Carrie did. The first one was with Planet 13. We had interviewed them 6 months ago, and we just mainly wanted to get caught up on the changes, and there have been several. Just after we did the interview, they closed the Next Green Wave acquisition, and they talked about their due diligence process there and why they did that deal to become more vertically integrated in California with the indoor premium grower. And then they also talked about timelines for both Florida and their Chicago dispensary. And finally, we did an interview with a lender, and I'm blanking out on their name now. It was a long week. I don't know about for you, a terribly long week for me, but Bespoke Financial. And this is a company that's provided a lot of capital to a lot of different types of cannabis companies, and they've also raised money from some key investors. And so it was an interesting interview. This is one of the big themes we've been talking about over the last year, just how diversified the sources of funding have become for cannabis operators now. It was literally just selling stock. And then obviously we saw sale leasebacks. We've seen other types of debt. In fact, Bespoke offers about 5 different types of financing, which George talked about on the interview. So that was it. Pretty busy week. It'll stay pretty busy the rest of March, I suspect, as we go through the rest of the earnings season for cannabis companies, which gets me to the piece that I write each week as part of the newsletter. And this week we took a look at the conference calls from Curaleaf and GTI. And GTI reported on Tuesday morning early. That was a change in practice for them. They're always in the afternoon. For the first time, they went early. I'm not sure why. And then Curaleaf reported on Thursday afternoon. And both stocks were hit pretty hard this week. And I've already really mentioned what happened. So GTI missed on their adjusted EBITDA margin, and Curaleaf gave weak guidance. GTI doesn't give guidance. So in this piece, we talked about just some of the points that were made on the call. I always try to listen to these calls. If I don't listen to them, which I did for both those, I at least try to read the transcript. I think the calls are important. A lot of investors just read the press release and that's all their information. But the conference calls can offer a lot more information. Of course, there's the scripted part, and the company's just really telling you what they want you to know. But then there's the Q&A, and of course, not all the analysts really push that hard, but sometimes they do. And you can find out things and hear how the company responds to some of the tougher questions if they're asked. I think there are a few tough questions not asked, but that's usually the way it is. I didn't talk about it in the piece, but I'll say to you, I think the SEC filings, or in the case of Curaleaf, CDAR filings, are also very important. So, if you're investing in one of these companies, you shouldn't stop at the press release. You should make sure you understand what's said on the call and also what's in the filing. So in the piece this week, we kind of hit some of the highlights from the call. A little bit different for us. I don't think we've done that before. Something I do, I try to cover at 420 Investor, obviously. So with that, we'll call it a wrap, and hopefully this is a lighter week in terms of news flow. Just a few companies reporting this week. I think, ironically, they all start with A. I think it's AFC Gamma. I know it's a sin, and I forgot what the other one was, but I found it kind of odd. They're all A's, but the next week it really picks up a lot. So have a good week, and I'll be back next Saturday with more. Take care.